Gold prices are surging. Here is the easiest way to invest. Welcome to Get Started Investing, a show where we help you make the most of your money. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you?
I'm very good, Bryce. Very excited for this episode. You are right. Gold prices are surging, up 45% in the past 12 months.
Nice.
Yeah, it has.
That's a surge.
It has been a story. But look, it's not a story in the last 12 months. In the past 10 years, gold has delivered 11% per annum.
That's good as well.
Pretty good.
Yeah, can't complain with that.
In the past 200 years, gold's done pretty well.
Yeah, it hasn't gone anywhere.
So, look, gold is in the headlines, it's in the news, and today we are going to unpack how you can invest in it. But before we do, we want to say a big thank you to our long-term sponsor here on Get Started Investing, Betashares Direct.
That's it, Ren. On the platform, you can build your own investing journey with zero brokerage on over 300 shares and all ETFs on the ASX, including the gold ones that we're going to be talking about today. Ren, do you want a ready-made portfolio?
As long as it includes gold.
Nice. Well, there are over 10 to choose from, or you can build your own.
Automated investing lets you set, forget, and grow.
That's
Easy
it.
tax reporting, you want it, you got it.
Nice.
Performance reporting, it's there. And unlike any other investment platform in Australia.
Building wealth your way has never been easier. Search Betashares Direct and set up your account in minutes.
Betashares Capital Limited is the issuer of Betashares Direct. You should read the PDS and TMD available at betashares.com.au and consider whether the product is right for you. Investing involves risk. Refer to the PDS for info on other fees and costs.
Well, in today's episode, we're going to cover why investing in gold, how gold ETFs work, our 4 ASX-listed gold ETF top picks, and how gold can fit into your portfolio. So, Ren, let's kick off. Why gold?
A hedge against inflation. That is what you will hear as the reason to buy gold. The monetary system is the Australian dollar, the US dollar is being debased. Central banks are printing too much money, and your dollar is buying less. That is what you'll hear. That is the key reason why people buy gold.
Has it actually played out though?
Inflation. You ever heard of it?
Ever heard of it?
Yeah. Gold has been an effective hedge against inflation. And interestingly, you can see a real inflection point when in the 1970s, the world started to go off the gold standard. Before then, a dollar was redeemable for a portion of gold. Nixon took the US off the gold standard. The rest of the world followed. And gold, and that has saw high rates of inflation, and we can see that gold started growing faster as well. Like it has held its value against a declining currency.
So that's the main reason. Obviously, the returns that come with it have been pretty phenomenal as well.
I would say that stocks and property and a number of other investment assets have also held their value against a declining currency. So gold isn't alone in that respect, but it has been a really effective hedge against inflation. Yeah.
So then the question is, well, how do we actually buy it? And for us, there are 3 key ways that you can invest in gold. First is through physical gold ETFs. The second is through synthetic gold ETFs. And the third is through gold miners. And I should say that that's outside of actually going out.
I was going to say, yeah.
Outside of actually going out and buying physical gold yourself and storing it in a safe in your cupboard.
Yes. I mean, rings, jewelry, like that has been how generations of people have invested in gold.
Yes.
I think you could buy a bar of gold from the Perth Mint, but I think a bar of gold these days is probably touching on $1 million.
Oh, no.
You don't reckon?
Nah. I don't think so. I think it's definitely not. I think Dad has one. He wouldn't be spending.
Okay, 400 troy ounces. So
it's a couple of grand, isn't it?
$2,800 per troy ounce. That's in USD. Call it 2,900 times 400.
No, wasn't it times 4?
No, 400 troy ounces.
Is a gold bar.
Yeah. 400 troy ounces. Call it 3,000 USD a troy ounce. 1.2 million.
Yeah. Okay. Well, Dad definitely doesn't have that.
generations of people have bought gold jewelry, rings, necklaces, the like. You've got that fat chain that you always wear around the office.
Not true.
But the good news is it's actually easier now to buy gold than ever before because of the stock market and because of some of these ETFs. So you mentioned there are three: physical gold, synthetic gold, gold miners. So gold miners are the easiest ones to understand. They are an ETF that owns companies that go and mine gold. Then you've got physical gold ETFs that they go and actually buy big chunky bars of gold, put them in a safe. A lot of them sit in the JP Morgan safe in London, and they track the price of that physical gold. The third bucket is synthetic gold ETFs. They try and track the price using options and derivatives and the like. Our preference is, if you want to invest in the price of gold, invest in the price of gold. Don't invest in gold miners. There's separate thesis, separate risks, and physical gold over synthetic gold ETFs. And we'll talk about some of the physical gold ETFs that you can buy here in Australia.
That's right. So there are 4 here in Australia, Ren. There's the Global X Physical Gold ETF. The ticker is GOLD. There's the Betashares Gold Bullion ETF. It is currency hedged, meaning that you'll take out all of the currency risk. It is QAU. There's the VanEck Gold Bullion ETF. The ticker is NUGG. And then there's the Perth Mint Gold ETF, PMGOLD. All 4 of them are backed by physical gold, located in some vault around the world. And in some instances, I think you can actually go and redeem that gold yourself with the units of your ETF. So those are the 4 that we prefer.
So of those 4, the oldest are the Global X Physical Gold ETF and the Perth Mint Gold ETF. They were both, their inception dates were 2003. So 22 years in operation. They've both returned about 9.7% a year since inception. So again, that story of hedging against inflation and actually outperforming inflation holds with these gold ETFs.
Yeah. Now, I guess to close, how it fits in our portfolio, Ren, I'll be honest, I don't have any gold in my portfolio. Not because I don't believe it's a hedge against inflation, or not because I don't believe that the returns are there. It's more that for me, it's an opportunity cost. And whenever I come to putting money in gold, I think to myself, is there something else I could be putting this money in? And the answer is often yes.
Yeah.
So I think you made a very good point. It's not like the stocks that we own haven't been good hedges against inflation. So I don't think I'm missing that characteristic that it has. But for me, I don't have any exposure.
Yeah, I'm the same. I am always torn because I'll do an episode like this and I'll look at the returns and I'll understand the logic and I'll be like,
damn,
it's a pretty compelling case. But for me, I always think about what's the upside. So, gold will hedge against inflation plus maybe a couple of percentage points. But that's probably the best case scenario for gold. And that's why people love it, because the range of outcomes is narrower. But for me, it's the stocks that we buy, even just indexes that we buy, the range of outcomes is wider, but over the long term, I expect a better performance from the stocks. And if you think about, there was a long-term study done, it's called Triumph of the Optimist. It looked at 100 years of stock market returns, 1900 to 2000. In that time, the Australian stock market did about 6% a year after inflation. Nice. And so it not only hedged inflation, but then it delivered a meaningful return after that.
Pumped it.
And so for me, that is the thing that I always return to, and that I'm always reminded of, that gold can be a great investment. It's been a great investment for centuries, and there's no reason to think it won't continue to be a great investment. But there's lots of ways to make money these days, and for me, the opportunity set in stocks is more compelling for my stage of life and the goals that I have.
Now, just to close out, Chris actually has a question around this. Would you class gold ETFs as core or satellite?
I would class it as core. I would class it as long-term, set and forget, stick it in the bottom drawer. You can dollar cost average in over time if you want to, or you could just invest a lump sum and use that as your inflation hedge. Would you agree?
Yeah, I would agree.
Okay, yeah.
Absolutely. I don't think the return profile is there, or the
risk.
The
profile.
risk is the risk profile is there for it to not be. I wouldn't be worried about it sitting in a portfolio for 50 years.
Yeah. In fact, that's what it's designed to do.
Yes.
Yeah.
Yeah, very good point. Well, thank you for that question, Chris. We really appreciate you sending them in. If you'd like to ask a question, there'll be a link in the show notes where you can leave us a voicemail, or you can head to equitymates.com/contact. But Ren, that brings us to the end of today's episode.
Yeah, if you are enjoying this, please make sure you're subscribed wherever you're listening or watching. And if you're not watching, head over to the Get Started Investing YouTube channel. We're publishing everything as videos on YouTube now. We have heard that it's a wig out when people watch us for the first time because they think our voices are around the wrong way. So if you want to confuse your brain for a second, head over to our YouTube. The link is in the show notes and see whose voice matches whose face.
That's it. There's a link in the show notes as well to our Get Started Investing ETF comparison sheet where there'll be a breakdown of the ETFs that we've spoken about today and across other episodes in the podcast. But Ren, that does us for today. We'll pick it up next week.
Sounds good.